Gold just did the unthinkable. On Thursday, January 29th, 2026, the world's ultimate safe haven hit a staggering all-time high of nearly $5,600 an ounce. Then, in a matter of hours, the floor dropped out. Investors are cashing in, geopolitical tensions with Iran are reaching a boiling point, and the Federal Reserve is on the brink of a massive leadership shakeup. Is this the start of a deep correction, or just a pit stop on the way to $6,000? Today, we're breaking down the gold crash, the silver surge, and why the biggest crypto players are suddenly pivoting to physical bullion. Thursday was a roller coaster. After touching that record peak, spot gold fell 1.3% to settle around $53.30 per ounce. Earlier in the session, the volatility was even more extreme. At one point, prices were down more than 5% from the daily high. David Mager from High Ridge Futures called it aggressive selling, but context is everything. Even with this drop, gold is having its best month since the 1980s, up a massive 24% in January alone. And if you think the rally is dead, the big banks disagree. UBS just raised its forecast for 2026, predicting gold will hit $6,200 per ounce by the third quarter, before settling slightly lower to around $5,900 by year-end. While gold paused, silver has been on an absolute tear, hitting a new high of $121.64. That's a 60% gain in a single month, driven by massive supply shortages. Meanwhile, platinum and palladium are feeling the heat, both sliding after their own record runs. But the real X-factor is geopolitical. President Trump is ramping up pressure on Iran, urging a return to nuclear talks. This uncertainty is a double-edged sword. It fuels the fear that drives gold higher, but the volatility can also trigger sharp sell-offs as traders scramble for liquidity. Perhaps the most surprising move is coming from the crypto world. Tether, the company behind the USDT stablecoin, has announced plans to move 10 to 15% of its portfolio into physical gold bars. When the world's biggest digital dollar starts buying physical gold, you know the market shift is real. And finally, all eyes are on the Federal Reserve. Jerome Powell's term ends this May, and President Trump is expected to name a successor at any moment, with rumors swirling around Kevin Warsh. While rates held steady this month, markets are already pricing in a potential rate cut as early as June 2026. So, is the gold rush over? Far from it. What we're seeing is a classic buy the rumor, sell the news moment, mixed with heavy profit-taking. With central banks and crypto giants like Tether loading up, the long-term outlook remains historic. But now I want to hear from you. Are you buying this dip, or is gold too risky at $5,300? Drop a comment below.